Hello, and a massive hello to everybody. Hope everybody's having a great weekend wherever you may be, whatever you may be doing. This is 50 Pips, rocking and rolling, 8th of January 2017. So, no trade calls or recommendations, a response for them with stuff. We're here for educational purposes only. So, what's going on? Again, not an awful lot is going on really. But again, we're trying to do these updates, trying to stay regular and see what's going on. So, if everybody remembers what we're talking about going into the end of 2016, we're talking about looking for some healthy moves. So that meant correction in the equities lower, bonds higher, gold higher, dollar lower, right? So euro higher, right? Of course. So that's what we're looking at. We got a little bit of that towards the end of the year, and as we came into the beginning of the year, we said, we'd expect that, nothing's changed, right? Fundamentally, nothing's changed except for calendar years gone by, and that's what we're looking for. So far, so good across the board. Equity's still holding strong. We'll look at that, but we are seeing some decent moves. So as we said here, with the dollar index higher, last week we said we thought basically you could have 105 to the upside, but we thought you'd get 100. We hit 100 before we hit 105, right? So here we had a decent little correction back down. We printed into 101.30. I mean, you look at it as the 130, as the 130 being the pivotal level, right? It's marked up on the chart. And the only thing we said here, as we're hovering at highs, just a little healthy retracement, little asymmetric risk reward, you may have a little bit to the upside, but you've got 2.5 to 5% to the downside, right? So that's clearly the side we'd be a lot more interested in playing, right? So here, as we got that correction, the big question going into next year, into this week is it going to continue or not? Again, a bit of a twilight zone until we get the inauguration later on this month. But what we would say is, upside here is that sell-off point right into the 103s. That's going to be resistance. As long as we can hold below there, as long as the sellers are still capping, still coming in, we expect this to continue to come back down into what we would call a primary target. We said 100, but 100.30. If we break down, that's the pivotal line for a little bounce zone, or the bigger correction right back down into the 99, 98s. But so far, so good on this chart. We can't really complain, right? Metals, again, we think that the metals are particularly interesting, especially because the way the market is trading is everything's perfect, everything's beautiful. So we think there's definitely potentials for some shocks. Even though the year might end up being a beautiful year for equities, for everything, there's still some risk. So we thought that gold was trying to base here. We're going to some favorable seasonals, so we thought it was an interesting place to try and look for longs for at least a move back into this, this 50, but possibly all the way back into the 1200, even 1250 mark higher, right? And this is in play. So again, we really can't complain here. Now look at this 50 DMA being pivotal for Momo and flows, could be sold off, but we still think dips will likely get bought, and we've still got some more correction to the upside. So again, we can't complain on that chart either, right? In terms of equities on the YM, so on the Dow, as everybody's getting excited about the 20,000. I mean, it's quite funny. I was discussing this with some guys the other day. I can't remember the last time I talked about the Dow. I mean, it must be like 5 to 10 years ago. The only reason we're looking at the Dow is because everybody's getting so excited about the 20,000. But if not, I've never, ever looked at the Dow. I just don't. I think only CNBC is interested in the Dow. Nobody really cares about the Dow. At least I know a lot of people are gonna don't hit me up with the hate mails, but I think anybody who's really been doing this for a while professionally will agree that only TV cares about the Dow. But anyway, here, so what we're saying is, just as everybody's getting gung-ho about those 20,000, we think the risk reward is to the downside. So again, there have been plenty of opportunities to try and lay some out, take some off on the dips, lay them back out. So that's what we're doing, right? Are we going to press 20,000? We could, yeah. Are we going to press higher? We could. Are we going to sell off if we'll have to wait and see. But as far as we're concerned, we're definitely not buying these highs, and we're more than happy being nimble, trying to scalp some on any weakness into these highs, cover quickly part of the position, and then see if you get, hold partials to see if we get a decent roll. But, nothing much changes. This seems to be attracted. It doesn't have to print. It could. It'll be a pivotal level. But as far as we're concerned, we're much more happy trying to play the downside. And there'd be a lot of sell-offs there, moves down off that level. So it's been interesting. So again, we can't complain on that chart either. As far as the yen is concerned, we talked about the fact that we felt that this whole shaded area to the upside was a decent place to start to get. And again, you see it's the same chart across the board. Decent correction here. And as long as these highs hold, again, we think the healthy move is to see this try to correct back down, possibly into the 112s. That's going to be a pivotal level for a bigger move back into the 108s or for a rip back higher. But we still think the healthy move is to try to see a little bit of a correction here, so we can't complain on that chart either. In terms of euro, what's going on euro? Euro, we've been talking about this for a long time. Again, same chart. We said, we just don't understand why you'd want to press this to the short side, even if we're ultimately going to end up lower. We think, the risk reward is clearly to the upside. This could correct anywhere from, 5 to 15% and still hold a downtrend, right? So we think there have been a lot of opportunities, nice opportunities to play the long side on euro. So no change as far as we're concerned here. As long as we hold above these 104.50s, we think the risk is at least for a correction back into the 110, and that's what we're playing for. So again, also on this chart, we can't complain. Daily closes, weekly closes below this 104.50s, then it gets very heavy. But I refer you back to some other updates we did in terms of the weeklies. Even if you're looking for the parity, there's clearly interesting risk reward to the upside here. TLT also on the ZBs, what we said here, we're looking, we're very aggressively short. A lot of people, a lot of hate mail last year talking about this staying stubborn short on the ZBs. And then we actually covered these. Actually, let's get back to, let's see if we've got it on the futures chart. Let's just make a little bit more sense. And I think we covered, and now I can't remember, but I think we covered most of our shorts into this, 54, 52s kind of area, right? And then we said it's time to look for some kind of a healthy bounce, right? Some kind of a healthy bounce. So we struggled a little bit with that because we suffered a little bit of heat because it took some time there after it was pressing lower to bounce. But now, if you see this, we got that little, this is what we're looking at, this downside channel here. We said, as long as we can break out, we could get this move all the way back into the 50, but, ideally back into this whole sell-off area, on the TLT here, 127 to the 130s, and that's still what we're looking for. It's the same thing as the metals. When everything's priced in, everything's beautiful, everything's perfect, any little surprise, we think there's a chance for a little correction. So we definitely like to hold some kind of long exposure here, even though it's very tactical. Longer term we'd still be bearish, but far more bullish on the metals than we are on treasuries here. But that's, again, we can't complain on that chart either. If you're looking at the IWM, this has been our favorite short for quite some time here, and again is the first one we started to post, and you see, it still continues to struggle. So keep an eye on this, because especially if we can take out these lows, we'd expect this to try and accelerate to the downside a lot more, right? So here, similar to the action on Dow, except this is we prefer this chart, right? For trading Russell than the Dow anyway. And here, look at the way this is trading. As long as the sellers keep on capping it here, right? And all these failures would suggest that we have some unresolved business here to the downside, and especially if we can take this down, we think the move down can really accelerate. And this is a chart we very much like, so we can't complain here. Now, what hasn't been cooperating, and again, hasn't been cooperating, which is being bid, is the NASDAQ. But again, if you look at the charts across the board, whether you're looking S&P, Russell, Dow, or the IWM, clearly NASDAQ's being bid, right? It's being the strongest. So as always, when you're looking to try and do something, if you're trying to get short, you want to get short the weakest one, not the strongest one, right? Inversely, if you want to get long, you want to get long the strongest, not the weaker. I know it may be counterintuitive, right? But we've discussed this in the past. So there's really very little reason to try and catch this or do anything here. We'll have to see how it trades. If we come back down, this will probably be that breakup zone, will be a pivotal level. But I think here Nasdaq's probably the least interesting across the board, right? The most interesting remain the Russell and the Dow. Right, the Russell and the Dow, those are the ones that remain the most interesting things. So that's pretty much what we're looking at this week. Again, there could be a lot of wheeling and dealing. We'll have to see if we get any kind of any tweets out of Trump that moves the market. But again, there's been some fairly interesting trading opportunities, pretty much where we left off last year, and let's see what we get. So if anybody wants me to post any chart on Twitter, just hit me up. And again, thank you so much for listening. Thank you so much for sharing, for the likes, always very much appreciated. And see you guys around. I hope you find this interesting. Take care. Bye-bye.